पैसा कमाना किसको नहीं पसंद, right? Like they say, while you work for money, you should also know how to make your money work for you. That's why today's session is all about the top investment strategies for 2024. We have with us today Head of Domestic Savings at Policybazaar.com, Sameep Singh. Welcome to the show, Sameep.
Thanks, Umang.
So, Sameep, what are some key investment strategies that have emerged in 2024 to enhance portfolio performance?
See, in 2024, a lot of new things have come up. A lot of people are moving towards index funds. That is like the in thing in the last 1.5 years, in fact, where a lot of people want to just invest in an index, identify a good, good performing index, which is giving good returns, just invest in that and automatically not worrying about beating the benchmark, whatever the index given with some tracking error, you get similar returns. So that's a very in thing. It has lower cost also. So that's also a plus point. So that is something that people are exploring. A lot of people are becoming more aware. And we at Policybazaar are also driving the waiver of premium story. So that is also something that is, the adoption is higher is what we see in the business that we do, where a lot of people are investing for their family to secure their future. And if something happens to them, obviously the waiver of premium feature kicks in and their future is secure and the insurance company comes in and pays the premium. So knowledge about this feature is also increasing and adoption also in the terms of policy sold for this has increased.
What are some emerging technologies that individuals can leverage to enhance their investment decision-making process?
From a technology perspective, what I have seen that has come up is that, real-time tracking of fund performance and tracking of these features has become very easy. So you can just log into the app, track how many policies you have, what is the fund performance, where is your money invested. All of this has become very easy. So understanding where the money is being invested, what kind of returns you are getting and making decisions basis that. Earlier, it used to be a bit of a black box. You could not track that. So that has really come up in the last, couple of years, in fact. Other things that what people, are exploring is that there are a lot of tools nowadays where you can come in, input your expenses, your investments and kind of get an output sheet where they tell you what is the kind of investment that you should make, where you should invest more, are you too debt heavy or too equity heavy basis your age, and then realign your portfolio. So some of these investment tools have really come up the curve and are giving real-time decisions, decision making to people that you should realign your portfolio maybe.
In what ways have global economic trends influenced investment risk and opportunities, and how should investors align their portfolios accordingly?
See, global trends, what I see is a lot of people looking for returns. A lot of money in the Indian market specifically is going towards mid and small caps. So obviously they generally tend to outperform the general market. So there a large portion of investment from retail as well as global investors is going into that space. So obviously they are outperforming, but they have kind of reached their peaks at the current valuations and some correction happened. So in that space, so that is something that, people are really investing in because they want higher and higher returns. So investment in the mid and small cap space is really the in trend that is happening these days.
Sameep, what role do sustainability and ethical considerations play in investment decisions? And how can investors align their values with their portfolio?
This is a new trend again that has come up is the ESG funds. So environment, sustainability, governance. These are three key parameters on which companies are rated. And there's an index, around it, the ESG index. So where companies are rated on this and basis their scores, the fund allocation in these companies happens. So see, whether this will give good returns or bad returns, I'm not really sure about that currently. But sustainability, governance, some of these are very, very key issues for some people. So they might take investment decisions also basis that. So for example, if you are very environmentally conscious, you might want to invest with this philosophy where, see, the ESG score would be lower for companies, for somebody in the coal sector, power generation, right? Obviously, because it's not very environmentally, suitable industry. So the ESG score would be lower and your investment automatically kind of is lower in that sector. Whether this trend, it is very popular around the world. Whether this trend, kind of starts getting followed in India, currently we're not sure. The funds around this have definitely got launched in the last 6 months.
How can individuals leverage alternative investment options like cryptocurrency or fractional ownership to diversify their portfolio?
See, cryptocurrency, personally, I would not really advocate, investing in these. ideally normal retail investors should stick to the regular general investment portfolios like equity and debt, where what I would like to suggest is that a lot of strategic indices have got launched in the last 1 odd year, where so there are funds like the mid cap 150 momentum 50, so where the top 150 mid cap stocks are there, and there's a momentum score that gets calculated, and basis that the top 50 mid cap stocks get identified. And something similar is the Nifty Alpha 50, where the top 50 stocks in the Indian markets basis how they are beating the respective benchmarks. So an alpha score gets calculated and the top 50 stocks are identified. So some of these strategic indices, when we backtested, not us, basically NSE declares them. So the National Stock Exchange, when they backtested this data, they got that these strategies give very good returns. So 10-year returns are in the range of 25 to 28%. So obviously that's a very high return to get. So some of these indices are really popular. A lot of insurance companies and mutual funds are kind of replicating these indices. So if they just replicate it, the insurance company will just copy the portfolio and you will just get similar returns with a minimal tracking error. So that's a very good strategy I would suggest, rather than getting stuck in crypto or something which is very, very high risk. Some of these strategic indices are very good, have very phenomenal fund performance, and is something very new that you could try.
What are some practical steps that one can take to manage risk, particularly during market volatility?
See, market volatility in the short run will always be there, right? Corrections will happen, basis events that keep occurring. But if you have a 10-year horizon in your investment, generally you would always make good returns. I'll take the example of the COVID years, right? When the COVID hit us in around 2021, markets tagged to from 40,000, they went to 28,000. So that was a big drop, right? But if you just continued investing, today the Sensex is at around 75,000. So that's a 2.5x in 3 to 4 years, right? So see, that's the entire story. If you just stay there and keep investing and don't worry about short-term volatility in a growing country like India, where 7-8% GDP growth is the norm. So you would always get good returns in at least the next foreseeable 10-15 years. And if there is political stability, you are bound to get more.
Right. How has the regulatory landscape evolved and what implications does it have for investors in 2024?
See, the regulatory landscape specifically in 2024 hasn't really changed so much. But there are a couple of things, from a taxation perspective that you should keep in mind that have changed in the last couple of years, in fact. So in 2021, ULIP guidelines had come in where investments more than 2.5 lakhs in a ULIP policy had become taxable. So, but still, up to 2.5 lakhs, it is still tax free. And if you compare that with a mutual fund, it is complete. So their gains more than 1 lakh are taxable. So there's a 10% tax arbitrage if you keep investing for 2.5 lakhs every year in a ULIP policy. So that's a big benefit that you can get. From a non-par perspective, non-par or traditional policies, which give you a 6 to 7% guaranteed rate of return, they also became taxable from 2023 onwards. Policies bought after 2023. If the annual investment is more than 5 lakhs. So then again, up to 5 lakhs every year is tax free. Compare that to an FD, that's definitely a good proposition to, kind of utilize. So these are some very, very small things. If you do 7.5 lakhs every year, you can get tax free returns. So that is a big amount to invest, and it will definitely generate good returns. So that's something that everybody should utilize.
Now it's time for our audience questions.
We are more than happy to answer their queries, and hopefully we'll be able to guide them properly.
Sameep, our first question is from Mohit. He says, how can I effectively balance my short-term gains with long-term financial goals while making my investment decisions? See,
you need to have different products for short-term and long-term. That's the idea that at least I have. See, if I need to make a short-term investment, then again, if your horizon is only 2-3 months or 4 months, then you will have to invest in liquid funds, right? Liquid mutual funds that are there. There you can see it's mostly the returns would not be phenomenal, but you will get some return.
Right.
Or you can just put it in your FD if you find that convenient. For long-term investments, see, I would suggest that, as I mentioned, that ULIPs offer up to 2.5 lakhs annual investment or tax-free returns. So that's a good proposition to invest in if you have at least a 10-year horizon. If your horizon is only 2-3 years, then I would suggest just stick with mutual funds, because but then again, if you want to generate real wealth, right? So 2-3 years will not really see, you will get 15% return, 20% return. That will just increase your portfolio by 50 odd percent. 1 lakh might become 1 lakh 50. So that is not real wealth generation, but right, 1,50,000 is also not a great amount to have, right, in the end. So you'll have to at least keep investing for 10 years and stay for 10 years. And if you do that, you a 10,000 rupee investment at least for 20 years, you will easily get around 1 CR at a 12 to 14% rate of return. So that is what, if your horizon increases, suddenly the values start looking a lot more, lucrative. So that is the entire thing, that, for short term, yes, there are liquid funds for very short duration. You can do FDs, mutual funds, for a 3 to 6 month to 3 year duration. For longer term investments, you need to plan for everything. See, if you have a ULIP policy, that will give you good returns. If you want some income for the future, where all of us would retire in the end, right? Suppose, for example, we are 35 today, and by 55, 60 we'll retire. So the income would stop from then. So if I buy a long-term income policy where I pay for like 15 years or 10 years, I'll give an example. In fact, I bought this policy myself, where if you pay 5 lakh rupees a year for 10 years and you have a 2-year gap, then from the 13th year, you get almost 6.5 to 7 lakh rupees every year for the next 30 years. That's almost 7% rate of return. So see, I logged in that 7% rate today.
Right.
So see, that's a good way to replace income, right? I'll have some guaranteed income coming by the time I turn 47, 48. So that's it. See, you have to plan for all your goals, and so these are some of the options that you can choose from.
Okay, so our next question is from Mitali. She says, what tools or platforms would you recommend if I'm looking to educate myself and stay informed about investment trends?
See, so for example, if you don't want to read so much, right, and you can just visit Policybazaar. Our advisors would call you. They will understand your portfolio and accordingly guide you towards debt, equity, whatever investments suit your profile, right? So that is something. If you don't intend to read so much, and you can just call somebody at our platform and understand. That's the shortest and the easiest way to go about it.
Right.
If you really want to educate yourself, there are a lot of short-term courses. NSE, the National Stock Exchange, has an academy where you can just log in, pay for the course. It's an online course, and you can do a lot of these small certifications, which are very knowledgeable and help you understand the markets. Obviously, now some of these ed tech websites also have similar courses. But that is like, it's a long trodden path where you have to put in some amount of effort. If you want somebody to guide you, you can always visit Policybazaar. Obviously, there are other options also outside in the market. They'll come, understand your portfolio and guide you accordingly.
So Sameep, that was all the time we had. Audience, we hope we've been able to answer all your questions. If there's still anything left, you can put it in the comment section and we'll definitely take it up in the next session. Thank you and stay tuned for next week.